Nick's
Nick,
kicking.
how are you?
I'm doing great. How about yourselves?
Oh, not too bad. What's going on?
Oh, the usual, trying to recover from this weekend and trying to start up another week. And most likely, it should be an interesting week, to say it nicely. We have a lot of headlines coming up, so options sellers should be a little cautious this week. And there's no shame in waiting it out a little bit.
What are you playing? Where are you playing here this week, Nick?
I'm trying not to play the current week options contracts just because I don't want to get caught fighting the tape, regardless of how stupid I think it may be or not be this week. So I could probably take, let's say, if I am short the market or I want to short the market, instead of playing this week's contract, I go out to next week at least, or maybe even further, just so I would have time to react, as opposed to get engulfed in some move up.
How often do you do that, Nick? Where you say, well, first of all, it's a shorter week, right? And
Correct.
you have a big event, really two supposed big events. Thursday, the European decision on interest rates, and they've given every indication that hey, QE works for the U.S., QE for Europe will be just as good. And then Friday you got the jobs number. How often will you lay off the current week's options and go out a week? It doesn't seem like there's something you do very often.
No, even this week I took a chance on 2020 credit call spreads in the SPX, and so what I did is I sold the 20s and bought the 25s behind it to limit my risk, but I also did a credit put spread to bring in some bullish money behind it. So I did an iron condor for this week, but I will decide on it, early in the day whether I want to keep it or I just want to sleep a little better and just forget about it. I don't do it often, but this week warrants it. I mean, if somebody is not an active trader, if they're trading out of a different time zone that doesn't allow them to check the market often, I definitely would not fight this week because you will get there is a chance that somebody will get blown out of a trade, and you will be left fully priced in the wrong. So when you're short a spread, it prices against you pretty quickly when it's the current week.
What's your thoughts here though? Over the weekend we didn't get anything from Ukraine coming out. And obviously we had some traders banking that something might happen over there because gold is getting murdered. So whoever was taking the gold hedge over the weekend is unwinding it here this morning. We got gold trading down $15 here in the pre-market. What are your thoughts here, Nick? Actually,
Yeah,
it's down 20 now.
this was something that was foreseeable. As a matter of fact, in my weekly recap last week, I did tell everybody that if we come into Monday and the world quote unquote hasn't ended, regardless of whether it's Ukraine or Gaza or ISIS or whatever, then we will see definitely a relief pop. Now, if the relief pop is not strong, then that means the bears are still somewhat not scared. But if the relief pop has legs and carries up, then it could be just that relief pop. So what do? I don't chase it until I get confirmation that it's somewhat fundamentally driven, meaning that the bulls are actually starting to take complete control, just like 2013, and then they're going to run it up another, 100 points or something like that. But I'm not in that camp. I'm in the camp that there's still relief pops until they show me otherwise. So yeah, I agree with you. I heard you and other people mention the fact that nothing happened, but really a lot has happened. I mean, I was reading the headlines over the weekend, and on the Russian front, Putin's starting to get a little more vocal about taking over Ukraine. I think I read a headline somewhere saying that, hey, if I could take it in 2 weeks if I wanted to, or something like that. I'm not sure exactly how it was worded. Also, ISIS, and I don't know, did we talk about this last week? I said as soon as you start hearing Lebanon and ISIS in the same headline, then you should worry a little bit more because that front is going to get heated because it's so close to Israel then. And I think ISIS beheaded a Lebanese soldier in the last 3 or 4 days. My question is, how did they get the soldier? Lebanon is about a 10-minute drive away from Israel. Israel will not stand for ISIS at its borders. Also, China, bad bank chatter is still in the air. So, yes, nothing happened physically, but it's still a brewing, whatever it is. So I'm still cautious. I'm playing both sides of the fence. I speak in the third person to bulls and bears because I'm neither. I just want to stay away from current prices. So yeah, nothing happened, but the potential is still there. It didn't go away.
Let's get an update on your CMG trade. I wish you could
Uh,
I wish you could teach me to buy support instead of looking for it to go through because this 674 level, we've been talking about it now for a couple weeks. Had that sprint up near 700 when the Cleveland group came out with some good numbers. Came back down to 674.15 again on Friday, only 9 cents below the low from Thursday. Popped up strong, now trading up in the pre-market here. How you sitting on CMG?
I closed out of it for a profit, but I played it very actively, and I somewhat got lucky in it. But um, so I to recap it, I shorted it, and then it popped, and I added to my short to bring in more income. So the position I shorted, which is a debit put spread, just an easy position to do. Um, I brought in some credit call spread money to pay for the debit put spread, and I waited. So I kept getting opportunities to dig in my heels, but they were flighty, like you said. It just pops on nothing. So I just said, you know what? I've got coin from it. I'm just gonna back out. I'm tired of watching it, and I closed it out. From here, it's almost a coin flip. I mean, I still think if I were to initiate a new position in it, it would be on the short side, but it has a habit of consolidating. If you look at the chart, I don't know if you can pull up the chart of CMG. It pops, and one would think, "Oh my God, this is it. Now it's going to fall apart," and then it consolidates, and then boom, it pops again. So from here, it's almost a coin flip. That candle, the last candle, is somewhat bullish, right? Because they had the potential to keep it down there, but they didn't.
Can you make any money with this thing with a like a strangle, or would you recommend a straddle here? Because I know that this thing is going to move 50 points. I don't know when, but I mean,
Yeah,
just you
I
know,
agree with you. I
yeah.
agree with you.
How do I play this?
Well, if you want it to be risky, let's see. If you pull it up and go out to January, there are premiums there. So if you want to short it at 7:30, you can sell the January 7:30 call, and it brings you almost $22. And if you wanted to hedge your bet, you sell a January 15, 600 put, and it probably brings you another 15, $18. Then you have a strangle that's short. So now you want price to stay between those two between now and January. So if you think it's going to meander here between now and then, that would be a good play to do. But it has a lot of risk and it requires margin because of the price of the stock.
Well, what if I think it? I mean, if it's either going to 7:30 or 6:30, from this level. I mean,
Okay.
you pay too much premium, right, to go out far and
Right,
bank a
but what
bet
you
like.
can do is, if you buy, let's say, if you think it's going to 7:30 and you want to play through the January calls, you would buy a call that costs, $35 to buy in, close to 700 or 695 or something like that, and then you go way higher and you sell a credit call spread that brings in some money to pay for that some of that call, and or you buy a call that's out in time high, and then you sell some call against it now, which wouldn't have any risk added to it because you have the other one to protect you as long as it's at the same level. So it's like a calendar, is what I'm trying to tell you.
Yep.
So you buy the out and you start selling against it here to put it to work to reduce your entry level. And if you're correct in your thesis, you end up owning an asset that you bought at a discount.
Let's move on to a couple stocks that are making new all-time highs to this point. Tesla and Apple. We know you like to play both of these. You got positions in these, and how are you approaching these stocks as they make new all-time highs here this morning?
Yeah, Apple. I was just looking at the open interest before we got on, and it looks like, where is it? It is right here. So Apple, there's the high open interest this week so far is 102. So it looks like it's about where the Bulls and Bears are looking to fight. 103 is a better line for the Bears based on open interest. But now we have a new round of rumors in the last couple of days that's hitting the TV, which is the fact that it has a new mobile payment and the iPhone built in, and they have deals in place with Visa and Mastercard and whatever. So this rumor has surfaced before, but never to the fact that okay, they have deals already going. So this could be somewhat of a new thing going forward because it's a new stream of income for it, kind of like the iTunes deal, where it's bringing in money from something that they don't have currently. So it could be good news, and I wouldn't fight the bulls there. But the fight is still on. It's still a coin flip for me. I did buy puts for this week at 99 based on a hunch. So it's just, $50 or $100 or whatever. It was like so it's just money I threw on a lotto ticket.
Lotto tickets.
Yeah, and this is only based not because of Apple fundamentals. I think the company's fantastic. I just think that if Draghi cannot deliver anything that's going to wow everybody, I think the markets might puke. So because he's been talking about this bazooka forever, and now they expect him to use it this week. So the first hurdle is for him to use it and it be impressive enough. Second hurdle is for him he doesn't get any resistance from anybody else in the Eurozone. Because I'm not sure exactly who needs to bless this deal in order to happen as far as ECB QE, round of QEs.
What about Tesla? What's your thoughts there?
Oh my gosh, Tesla! I'm not in Tesla, and I didn't even look at it because it's almost above my pay grade. No, seriously, it has room to go up based on if you draw a line at the highs in the uptrend, you can see it nice and clear, and it has a few bucks upwards to go. Maybe this morning, if it pops up there and it touches, it has the potential to keep going. I am not a fan of it as far as price action because trend what I'm seeing on the charts, but I do not want to argue with stupid here, and I would not short it. So if anything, I can go long it via a credit put spread somewhere around 240 with 2-3 weeks out if I can get any premium. If I can't, then I'll just sit it out and until I get a better indication of levels of where they want to take it or not. Again, here I can argue both sides of the fence, and it's almost like the whole market because we are so extended. But every technician out there I read expects new highs, so everybody's expecting so much good when nothing good was added to the macro thesis. So I'm thinking they're either all right and something's going to happen and we're going to run up another leg up, a good sized leg up, or we're going to deflate pretty quickly. So it's almost a coin flip. So whatever you guys do or whatever I'm doing is definitely nimble.
Okay, taking a look here at Priceline. Priceline had that bump over 1300, over 1320 on the earnings, but it's just it's only can manage maybe one good up day since then, or maybe two. How you playing this issue?
Priceline, I made a note last week that it would be a good lotto ticket this week just because they are heavily tied to Europe. So if the Eurozone comes out with a QE that is deemed successful or good thing for Europe, then Priceline should pop. So if I wanted to play Priceline for the long, I would either buy a cheap lotto for this week's contracts as far as calls because this guy runs pretty quickly and it's been under pressure like you said, so it may get maybe they're waiting for the actual QE to hit and for the market to accept it. So that would make a good lotto ticket this week. I like Priceline. It's definitely a momentum stock, but one that does not have a lot of froth. It actually makes money, but it trades like a frothy stock. So I do like Priceline for a lotto ticket this week and see what happens.
Okay, also coming into a very, very good support level. I just want to alert our traders that back on July 31st and August 1st, you had two lows between 12, actually two lows within 20 cents, 1236.47, 1236.66. Haven't quite got there yet, but maybe if it gets down there, maybe take a look at some.
But I also see a scenario for it to get under 1200. So whatever I do, it'll be via the options market because you can limit your loss by saying, okay, I'm paying this much to enter this bullish trade, and if I'm wrong, then so be it. As opposed to pile into the stock at $1,250 or whatever. whatever it is, and then find out that you're going to get slashed. $50 a day is nothing for the stock.
Okay, Theo's in there, and I don't know. Have you been following this Family Dollar General saga at all? It just seems
Yes.
like they're okay. So Theo's in here, and he asked how to play this new offer. Do you have any insights into that?
No, I was playing it. I shorted. I forget who it was now. But anyway, it, the day when the first they announced it, both stocks went up. I shorted the buyer, and other than that, I don't have any insight on it. If you give me the ticker that Theo's looking at, maybe I can look at it technically and see if I can see anything that's playable there.
I
But
guess we. I guess we
I
need to
don't
look at
like
the.
headlines. I mean, you know that credit spreads the main
Yeah.
enemy is headline. So it would be if I play either of those again, it would be lotto style, meaning that the entry point, the cost to my trade is limited, but it has a long shot of working out or even medium shot with a decent reward. I don't do it via credit spreads because then I don't know how they're going to react to whatever headline comes out. So it's not a good strategy to do for credit spreads.
I mean, FDO is trading up on the price, and also Dollar General. So I guess if Dollar, I mean, they're going higher in price for the offer, and the stock is going higher. So I guess the best answer to that, Theo, is if whatever options you're doing, make sure that you define your risk. You don't leave it open ended.
Yes, I would not short options into headlines, and never actually. I never do credit spreads into an event, earnings, or an imminent headline, because then you really are doing a coin flip, and that's not a good way of growing capital.
Okay,
Just as
go ahead, Dennis.
I was just going to say, just as you guys have been talking here, I've been kind of flipping through some charts, and it's interesting because we kind of really are in a stock pickers market here right now. You look at Tesla and Apple making new all-time highs, but even when you talk about Priceline, that's significantly off of its highs. You look at Google, it's still a ways off of its highs. You look at some of these other stocks, like even if you go into some smaller stocks like Wynn Resorts, it's significantly off its highs. There's a lot of stocks that are still a long ways away from their highs, despite the S&P futures making new all-time highs. What are your thoughts here, Nick? Is it not broad based to keep driving it enough higher, or is it just being led by a few stocks?
I think Apple did the market a favor by holding up and running while the markets were kind of wanting to sell off, and they kind of like took some strength from Apple, and they didn't fall apart under pressure last couple of weeks. And any new position I'm putting, it seems like if it's long, it's to hedge the shorts I started. So I'm of the camp of doing some credit call spreads with room, leaving the market some rope on for the upside. So I'm not shorting it at the current prices, but I'm shorting it way out in time and up in price. And any new long position I'm bringing in is to hedge some of those. So if the small caps pop, I'm doing some credit call spreads against them, and then when they sell off a little bit, I may bring in some money by doing some credit put spreads against them to hedge them, I should say. So I'm leaving room. I don't know what they're going to do. I hear people already talking about the next milestone in the SPX, and I was like, oh my gosh, we just crossed the 2000 and it's still not cemented. And as a matter of fact, this week's open interest, the bears have not let it go yet, the 2000 mark. So now they're talking about 100 points higher than that. I don't know. So I'll just play the range as long as I can. Google has a nice range these days. Not too many people are talking about it. So the Goog is tradable maybe by iron condors this week. Probably the safest out of all of them if you're nimble.
Okay, Nick. Well, thanks for coming on. We'll see how things transpire this week with Mr. Draghi, the unemployment number, and we'll get back at you next Tuesday.
Bring out the popcorns and watch what the market will react, how the market will react to him.
Okay.
Thanks, guys.
All right, thanks, Nick.